Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
That's right. Welcome to the U.S. Markets Wrap. We saw a sea of red with the Dow Jones Industrial Average tumbling for a second day as President Donald Trump's tariffs left investors fearful of potential shockwaves for the economy. The blue chip average dropped 1.55%, building on the plunge of nearly 650 points just a day ago, ending the session at 42,521. Meanwhile, the S&P 500 dropped 1.2% and closed at 5,778 after notching its worst day of the year in the prior session, while the Nasdaq Composite lost 0.35% to finish at 18,285. Now, for more insights, we're joined by Sonu Varghese, Vice President and Global Macro Strategist at the Carson Group. Sonu, welcome back to the show.
Thank you for having me, Emaad.
Yeah, you're very welcome. Let's kick things off by asking for your assessment of how markets reacted overnight to Trump's tariffs and how long these effects could last.
Look, the volatility and uncertainty don't make for good positive markets, and that's essentially what we saw today. In fact, we did see a little bit of a rally after midday. I think there was some reports that maybe the tariffs on Canada and Mexico with 25% tariffs, 10% on Canadian energy imports into the U.S., that may be pulled back potentially by tomorrow. But, this is all very unclear right now. It just adds to the uncertainty, like I said. And that never makes for positive markets. I mean, by the time the S&P 500 closed, it was down more than 1%. And that was on the back of yesterday's big drop as well. So, I think markets are reflecting the volatility created by the threat of tariffs.
Yeah, and
now that's gone into place as well.
Yeah, sorry about that. And we haven't even touched on China, who retaliated with additional tariffs of up to 15% on some U.S. goods that will take effect from March the 10th. So I suppose we wait with bated breath as further developments unfold. In recent months, Sonu, we did see a slight rebound in U.S. manufacturing, even as interest rates remain elevated. Could tariffs derail the tentative recovery?
I think we're seeing the impact of that already. The ISM manufacturing PMI, which is a sentiment survey, sort of like a mood check around manufacturers in the United States, especially the large manufacturers. And after the election, to your point, I mean, November, December, into January too, we saw, sentiment pick up. And, maybe animal spirits, if you want to think about it that way. Manufacturers are excited about the potential for, tax policy opportunities, deregulation, things like that. But now, when we just got the latest manufacturing PMI numbers for February, it came in at the 50 mark, 50 implying that, the manufacturing sector is just barely expanding. And then the prices component, right, that rose to about 62. That's a huge month-over-month gain. That's the largest one we've seen in over a year. And every single comment within that survey talked about tariffs and how that tariff environment is creating uncertainty and volatility.
Yeah, that uncertainty and volatility is also causing concerns around supply chain disruptions, rising raw material costs. In your opinion, how long can the U.S. economy sustain growth in the face of such protectionist policies? Do you think tariff-induced pressures will result in long-term inflation or even stagnation for that matter?
I think, tariffs by itself, unless you have a continuous ratcheting up of tariffs, say 10% this month, 10% next month, 10% the month after, which would be, a lot, right? And that's the case where we get actually inflation. By itself, for example, 25% tariffs, it is a big deal, right? And same thing, 20% tariffs on Chinese imports. That's going to raise prices, but all else equal, it should be a one-time effect. And now the U.S. dollar has also been quite elevated, so that's going to mitigate some of that inflationary or the price impact. I shouldn't say inflationary. But what it's going to do is it's going to put the Federal Reserve on pause for even longer, because they're going to be like, we need to wait to see what, all this tariff policy, where it settles down. And then we got to figure out what the impact of that is on prices and perhaps on inflation too. But this is just going to make them pause even more before cutting rates, right? So I think the inflation outlook outside of tariffs had been positive so far. And there are disinflationary trends which should continue into the rest of this year and mitigate some of what we are seeing on the tariff side. But we may see one-off price increases. And that's going to be, it's not across the board. It's going to be different sectors because, the U.S. may import certain goods more than other goods, right? So the impact is not going to be broadly felt equally. But at the same time, where it's going to make itself manifest in an adverse way is the Federal Reserve just sitting on their hands for longer.
Yeah, so as this situation around tariffs continues to create uncertainty in the markets, my next question is, which sectors could be a safe haven for investors to look at or even potentially could outperform?
We have actually, especially since the election, and even over the last month and a half, we've seen that very cyclical, higher beta names, higher beta parts of the market that are more, typically more volatile. They tend to do badly in, environments like this. So these include things like small caps, consumer discretionary names, things like that. So we've stepped away from those kind of areas of the market. We've gone into more defensive areas like low volatility areas of the market, whether it's your staples and things like that. Healthcare is another example. We're still optimistic about the market because we think, look, the U.S. economy is ultimately dependent on consumption, 70% dependent on consumption. Consumption comes from income, and right now income growth is running quite a bit ahead of inflation. So that's still a very good foundation for the U.S. economy. But all these other headwinds, because of tariff uncertainty, interest rates, elevated interest rates that's going to hit housing and manufacturing, that could be the difference between 3% GDP growth versus 2% GDP growth. And that's essentially what we are sort of positioning for right now.
Sure. It's hard to look beyond, tariffs right now, but what do you think the market's next major concern is? Are investors only fixated on the trade war, or should they be paying closer attention to other economic indicators like consumer spending and perhaps inflation trends?
I think it gets back to Federal Reserve policy.
Yeah.
Right now, the market is expecting about 2 to 3 cuts, maybe three more interest rate cuts in 2025. The question is, do we get those cuts because growth is weakening? For example, is the unemployment rate going to go up from 4% to, say, 4.3, 4.4%? The good news there is that will prompt rate cuts sooner rather than later. But the bad news is the unemployment rate's gone up, right? That means less incomes in the economy. So I think that's what we're watching. What's the labor market? The inflation numbers are not going to reflect anything with respect to tariffs for another month or two, at least, at the earliest, right? So in the meantime, we could, the inflation outlook by itself, all else equal, is favorable, but it's really on what's happening with the labor market, right? Does that weaken? Does that prompt the Fed to cut rates sooner rather than later? Or if the unemployment rate stays at 4%, maybe the Fed just sits on their hands till June or July before deciding to cut rates again. So I think the labor market is what we're going to be watching. Like I said, that's the foundation of a fairly strong U.S. economy today. If that continues, we get maybe 2% GDP growth. If that starts to fall back, I think then we are in trouble.
Yeah, as you rightly said, the labor market usually an indicator of the health of the U.S. economy, so we'll be tracking that as well. Sonu, as always, thanks so much for your time and your insights, and have a good evening.
You too.
Cheers.
Thank you.
That was Sonu Varghese, Vice President and Global Macro Strategist at the Carson Group, and you're listening to Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.